Hello, everyone. It is Friday, September 17th, 2021. I can't believe it. And it is time for another Southern California first-time home buyer market update. My name is Stephen Mead with Domicile Real Estate, where we are on a mission to help California's renters become homeowners. We've had kind of some cooler weather, a little bit of a kind of an unexpected early fall, I think we're getting here. One thing I just want to talk about before we jump in to the stats is something that I saw on Facebook this week from another real estate professional. I'm going to laugh if he watches this and actually sends me a message, but he posted up on his Facebook profile, "Who here has ever won by waiting out a market?" And I think what he's talking about is that notion of, I think he's asking the wrong question personally. Markets are funny things. I think everybody's trying to predict what's going to happen. They're trying to look at what happened in the past, and they're trying to extrapolate the future so they can give themselves the confidence to believe that they can predict what's going to happen. And I frankly think that it's all a bunch of BS. And I say this as an economist, right? I say this as someone with a degree. I think the smartest thing you can do is analyze your risk, analyze your long-term prospects, and make decisions where you have particular advantage. I think that is far more successful than trying to play the game of guessing what is going to happen 6 months from now. So, I had someone come to me and say, "What do you think the real estate market is going to do?" And I said, "Well, what I think it's going to do is one thing." And I said, ironically, I said, "I bet you want me to predict what's going to happen in the next 12 months." And I said, "I'm not very good at that." I said, "I think I might be better at predicting what's going to happen over the next 5 years, or at least somewhere along that 5-year time horizon." I think the right question to ask yourself, if you're the kind of person who's sitting on the fence, the right question is, do you think in the long run that real estate in California will be more or less valuable than it is today? And, for me, when I think about the answer to that question, I think about, are we building enough housing? Do we have a housing shortage? I'm thinking about all these sorts of things in there. Do I think that there's a trend towards higher density, which immediately makes lower density properties worth more? Big news today. I don't know if any of you have been following along with the news on this, but there is a series of state laws being signed into law that basically say, the big one is that single family zoning can actually be eliminated in a lot of cases, and allowing the building of duplexes where previously only single family homes were allowed to be built. I think that going forward, we're going to see that higher density. So if you're a person who's in that entry level single family home category, I think you're in a particularly good place over the next 10, 20 years. I think that that's a great spot to be, because I think those homes will, relatively speaking, only be worth more and more money because we can't build new ones and the number of them will dwindle. Anyhow, let's jump into the stats. It's Friday and we've got some reason to celebrate. And I like delivering good news on Fridays. So let's jump into it. Okay. So just as a reminder to everybody, when we look at this closed price graph, we are taking a look backwards, right? This is what's called a trailing indicator. This tells us what has already happened. It is too late. If you look at this graph and you think, boy, I would really like to have bought during one of these dips, one of these weeks where the prices were weaker, too late. This has already passed. The good news is, when I look at this price here, we hit a new high at $745 on our entry-level single-family home, but that was 4 to 6 weeks ago. And I think this week especially, I'm going to tell you why I don't think this is a 745 week if you are out there in the marketplace this week. The condo market continues to kind of be a little more sluggish than we would have expected, right? And I'm frankly a little puzzled by that, because I think there's kind of a lot of indicators that say prices should be rising for condos more than they are. I think there might be a little bit of an affordability ceiling that we're hitting on condos. I also think people might be adjusting to kind of that new reality that, frankly, condos are going to be a more popular housing type into the future. So if we look at what our payment is, and again, I do this because I want to show where we are relative to over 3 years ago. We were $3,600. Today we're at $4,157. I don't think that's an unreasonable increase over almost 3.5 years. I do think wages have moved significantly since then. But if we look at our condo, I mean, this is the one that, again, this just fascinates me. We were at $2,900. Where are we today? $2,975. It actually means if you are a condo buyer, condos are basically cheaper today versus median in household income than they were 3.5 years ago. So the price of housing has actually gone down, right? Which, we're not talking about the nominal price of the house. We're talking about the payments that people actually have to pay to get into a house. Just for fun, we like to show, hey, what is the actual household income you need to afford these based on our specs here are 5% down, including mortgage, insurance, taxes, and everything. 102 for entry-level single-family home and 73,000 for our condos. I don't think these are unreasonable numbers. I think it is still very possible for regular, normal people to afford and buy homes in California. Let's talk about absorption rate. Now it's time for some good news. If you're a buyer, why is the fall a more fun time to buy a house for you? Well, here's a very good reason. Our condo, we're still at that 90% absorption rate, but boy, look at the tumble we've taken on those entry-level single-family homes. 81% is by no means a buyer's market, but this is just more of a strong seller's market, not really the kind of crazy levels we've seen the last couple of weeks. I think that's very, very important to bear in mind. In fact, this is the lowest number we've seen since right after the 4th of July, right? When we're talking about single family homes, the condo is still very high and being resilient. Again, I'm surprised we haven't seen some price creep in that condo category. Now let's look at total inventory, right? And I think if you are a buyer, this is something that you really care about. And again, I'm fascinated by the difference between condos and single family homes. I'm still trying to work through, I think there's a number of possibilities of what's going on here. But if you look, I mean, this condo inventory is deteriorated. I mean, we are at the worst point that we were at during the spring right now for condo inventory. If you follow this chart for entry-level single-family homes, you see it kind of rose through the summer, hitting a peak through July. It dropped, and now it's kind of bounced back a little bit. Generally, we do see inventory just kind of taper off as we go towards the fall. So I'm kind of curious, is this kind of a one-week blip? Is this something that we're going to actually see? Are we going to actually see this continue to go further, or are we going to see that it goes back to dropping down? Now, when we look at our 14-day still active, one thing I mentioned was that prices are a trailing indicator. Absorption rate is a now indicator, and I would even argue that this 14-day still active is a bit of a leading indicator. And when these numbers go up, that means the market is getting less competitive. Where are we with this? Well, we're near kind of our high point that we saw back around July. So not going to any new place. And then our condos actually dropped again, which I think is, again, interesting. But this is really the chart that I think should tell you something. And, I think we really need to take a look at this because we now have a two-week trend. So I want to talk about what's happening with our entry-level single-family homes first and foremost. We have not seen over 4 weeks of inventory since, again, back in July. Now, I'm willing to concede that part of this might be a result of some of these Labor Day timing. We run a lot of our stats based on 14 days, which means we are covering that Labor Day weekend period during our calculations. And that has a way of kind of playing with things. Holiday weekends are always a little bit funny, but I don't think there's any denying that we've, hitting over the 4-week mark. The last time we did that was in July, and the last time before that was all the way back in January at the beginning of the year. I definitely think, relatively speaking, this past week was a pretty good week to be a home buyer, and I think this coming week will be a pretty decent week to be a first-time home buyer. Now, what's super interesting about that is look at where we are. Just over 4 weeks, we are slightly better than we were in September of 2020. But look at the condo market. we're at 5 weeks of inventory, which is still better than our entry-level single-family homes. But look where we were back in the fall. Gosh, we were over 7.5 weeks of inventory in the fall. Condos are a much tighter market than they were last fall. So what's the takeaways? What can you actually do with this information? How is this information useful to you? Well, I think if you were a person who felt like the summer was just too crazy and you didn't want to wade into the market, I've got some good news for you. The market is not as crazy as it was in the summer, and interest rates are still low. When you're trying to evaluate that decision of is now a good time for you, number one, you should probably call us because we can help you work through that decision. But I also think you should look inward. I think trying to play this game of guessing the short-term market is a fool's errand. I think you can look at trends. I think you can look at what you think is going to happen, kind of these long-term trends, but trying to guess the market over the next 12 months, good luck. I had a fun conversation with another economist. I don't think anybody predicted the sort of run on houses that occurred in 2020 and through 2021. I just don't think that that was on anybody's radar as a predicted outcome during the pandemic. And yet here we are, right? So definitely look inward, definitely think about those long-term trends. That short-term guessing in the market is kind of foolish, I think, and you're more likely to be wrong than right. So with that said, how can we help you? That's what we're here to do. If you are someone who's considered home buying, definitely reach out to us. We hope you enjoy these market updates. Don't forget to like, subscribe, hit that notification bell. And if you have questions, comments, we love those too. And we'll see you real soon. Our regular whole market updates do come out on Tuesday. So if you aren't subscribing, you haven't hit that notification bell, you might not see them. So definitely do that. Anyhow, thanks so much, everybody. And we will see you next week.